Welcome back to Tip TV. My name's Charlie Burton. Today on the show, we've got private trader Jim Brindley. Jim, welcome to the show.
Thank you.
Jim, just tell the audience a little bit about yourself. Tell us a little bit about your background, your professional background, and how you got into trading.
Yeah, I worked 25 years in the telecoms business, firstly as an engineer, as a salesman. 2009, left full-time employment. Did two things. Whilst I was looking for a new job, learnt how to trade stocks and shares. And with the help of my father, we looked at engineering companies and how to get leverage. We looked at spread betting and CFDs and thought, wouldn't it be better if we could learn to use leverage properly and to maximise our profits in downturns as well as going with the market. At the same time, I started my own business as well, and that continued my kind of strengths in the telecoms business while I built up my trading skills.
Because when you going back a little bit, so you're in telecoms for a long 25 years, you said, but and it was really ripe for a long time during the 90s, and you had all great share options, and so but you did sell out some of those share options before.
Thankfully, yes.
Yeah.
I wasn't left empty-handed at the time of the company going into administration. So I'd come away with a bit of cash, sold a few toys,
Yeah.
raised the capital to start the business and to start share
So you
trading.
put yourself in a reasonable position then by, from a cash perspective, you had a business you were developing, but also had this interest. I know you said your father had been investing in the markets for a long time.
Yes, and his father before that. So I can remember as a young boy going to see Grandpa, and he'd be there with his Financial Times on the telephone to his broker, way before the internet came along.
Right. And so you bought a couple of books, didn't you? You were doing, when you first started trading, so to speak, in 2009. Great time to be investing in the stock market, by the way. Actually, it was, wasn't it? Because we'd bottomed in March 2009. Did that benefit you?
Not really.
Ah.
I should have invested more. But I bought a book, my father gave me a book, The Naked Trader.
Yep.
And that helped someone fairly new to balance sheets and profit and loss accounts how to understand this jingo of the financial markets. It gave me a simple to understand text to read, the possibility of a seminar so that I could educate myself. It kept me busy as well while I was looking to find new work and new opportunities.
Right, okay. And so you were doing that, and then how did you transfer across? I know you still do share trading because you trade your pensions and the likes. How did you come across and move across into shorter term trading? You said you were involved on some bulletin boards, and then you followed a guy who was doing some S&P index trading and the likes.
That's right. So whilst on this bulletin board, it was very a lot of creative people there that were doing a lot of investigation. We were sharing that information, but at the same time there was a member of the team who was also trading indices, making money when the markets went down as well as up. And I thought to myself, well, A, he's using leverage, B, he's making money whatever happens. That's something I should look at. And that's what tweaked my interest. At the same time, my father was saying the same thing. So-and-so does spread betting, he shorts. What's this shorting business? What's the difference between spread betting and CFDs? And he actually set me an assignment to go and look at what are the advantages of this, what are the disadvantages of that, how do we take advantage?
Right, okay, so you went through that process, and then started trading by yourselves?
Yeah, I can remember the first trade. It was on the FTSE 100 index. I think I'd opened an account with one of the brokers for about, £500. Quickly realised I knew nothing. And then started looking around for some more education, particularly on technical analysis. And that's how I started spread betting.
Right, okay. Yeah. And but now you're doing a lot more shorter term trading. So how did you make that transition? How did you get into the short term trading that you're doing now?
The short term trading, I guess, starting with my generation, we wanted quick results, we wanted quick returns. I've had to kind of moderate that incentive, that feeling a bit, and that desire. And so that was the inspiration. How do we, every month, make a return? And whereas my father's horizons were more long-term, he was managing a different style. So that's what I was interested in learning. And various educators or chat rooms kind of cater for that need.
Yeah.
Provides guidance, and there's a lot of bad ones out there. I can say, choose carefully, otherwise you'll pick up some very bad habits.
Right, okay. And now you actually joined my company earlier on this year, didn't you?
Yes.
So you came across us, I guess, via the web, or however you came across us?
I'd seen the TV program, Charlie, and very impressed with your approach, and then someone linked the program with Easy Trader.
Right.
And I joined one of your visitor sessions and actually got to see your method, not in detail, but it showed me the rigorousness, the attention to detail, and I felt safe joining the room and buying the material.
Now, it's quite interesting because that was earlier on this year, and we're just talking about this over coffee earlier. You seem to have taken to it quite quickly, our methods and some of those styles. But do you think that there's an element of, well, you've got quite a few years' experience, having started in 2009, and that's helped you along the way?
Absolutely. Although I was a beginner to Forex trading in April this year, I'd been trading indices, I'd learnt a lot of the kind of basic building blocks. I think the value of coming to Easy Trader was how to put those blocks together, how to use indicators that I'd already heard about and been using, but piecing them together and to develop a much tighter setup and strategy to trading Forex.
It's interesting you said that because we don't try and reinvent the wheel. So we don't try and come out with different indicators which are just a morphed version of something that's already there. So, but what you said was the application of those indicators that was different.
Yes. I think the use of the indicators, the importance of them at particular times in the market or the price chart, and how those indicators can instill confidence in your conviction of where the price is going to go next. I think the combination of that plus the use of the multi-time frame really helped minimize the losses and increase the wins.
Can you talk a little bit more about multi-time frame? Because some of the viewers won't know what that means.
Yeah, for example, some of the setups are based on a 5-minute chart. But in selecting that setup, it's also conscious that what's happening in the hourly time frame, what's happening in the 4-hourly time frame, what's happening on the daily time frame. So quite often now, instead of sitting down at 8 o'clock wondering where I'm going to place my first trade, I've looked at the daily chart the night before or early that morning. I've seen what's happened in the price action overnight. What's the market telling me? What's happening? Is there a bounce off a key level? Is there a moving average moving into range? And that will then dictate, well, I've seen that on the higher time frame, so let's look for a setup on the lower time frame that's in that direction or with that concept. But then also to look at the trade in another aspect and say, well, in that 5-minute time frame, where does that theory, that strategy, that setup, where does it fail? And I think by looking at both sides there with the higher time frames, you've almost accepted the loss before you take the trade. And then when it becomes a winner, you think, well, that's what I expected anyway.
So much to be said about experience. Now, what we're going to do in part 2 is we're going to talk about some of your returns and some of the more specifics of trading and pick up from where we just about to leave off, because you've put in some pretty good monthly returns. We've had a trading competition. You've been making 28%, 26% returns. We're going to talk about how you've gone about approaching that in a moment. So that's the end of part 1. We'll come back after this break.